The Senate Tax Committee has been called to order, and we do have a quorum, members. So tonight, we're having a bit of a mouse problem here, just a second. So today we're going to just briefly, we're going to look at the tax bill. This committee has done a lot of great work over the session. Today we're going to look at the tax bill as has been agreed to through the Senate Tax Working Group. And then we will amend the tax bill to include the language that has been agreed to as well. And I'll be asking staff to walk through that. So we will get through in a little bit quicker manner. But members, we have a great tax bill in front of us. After a year where Minnesotans have been struggling, having difficulties in many different areas, we're going to deliver some good news here. And this tax bill is going to empower Minnesotans. It's going to encourage that continued economic growth. And we have a number of provisions that will do that. It's a very strong bipartisan bill. And for today, then I would move that we take up Senate File 26, which is the omnibus tax bill. And I'll ask our nonpartisan staff to walk through Senate File 26. And I need, Ms. Pollack, would it be easier to move the A7 amendment and then you can go through the bill in that order as amended with the A7?
Madam Chair, whether to move the A7 is up to you. I think just for purposes of not having the amendment engrossed at this point, it might be easier to go through the bill itself, and then we can go through the provisions in the A7 that would need to be discussed, because there are some provisions that were not in the bill as we've heard it in the working group.
Thank you, Ms. Pollack. So with that said, members, I will ask staff to start the walkthrough on the Senate File 26. You should have those documents available to you. And then we'll also have Mr. Whelms, Mr. Sylvia go through the spreadsheet as well. And then we will work through the amendment. Ms. Pollack, to the bill.
Madam Chair and members, yes, I will be going through Article 1, Federal Conformity and Individual Income and Corporate Franchise Taxes. Section 1 here extends the Angel credit for 1 year for tax year 22 at $5 million. Section 2 is the film production credit. This was a House provision. The credit is equal to 25% of eligible production costs. 4.95 million are allocated for credit certificates. The credit is assignable, and DEED is required to submit a report to the Tax and Economic Development Committees on various aspects of the credit, and it is effective for tax years 2021 to 2024. Sections 3 and 4 provide for conformity to 3 federal acts. A couple of the big item provisions include the exclusion from income of PPP loan forgiveness and allowable deductions for business expenses that were paid with forgiven PPP loans, the exclusion from income of up to $10,200 of unemployment benefits received in 2020 for taxpayers with income of up to $150,000, and the exclusion from income for discharge of indebtedness of a principal residence for tax years 2018 to 2020. Section 6 is some clarification language, providing clarification of how Minnesota treats itemized deductions for casualty losses to make it consistent with the current administration of that provision. Section 7 is the Senate's volunteer driver reimbursement to provide a subtraction for the amount of mileage reimbursements paid by charitable organizations, the difference between that amount and the business mileage. Section 8 is the film production credit, as I described earlier. This is actually the section of law that allows the income tax credit. Section 9 pertains to the working family credit, and it modifies it to allow taxpayers 19 or older without qualifying children to claim the credit. Under current law, the minimum age is 21. Section 10 extends the sunset date on the historic structure rehabilitation credit for 1 year. Section 11 modifies the student loan credit. This was a House provision to kind of address the marriage penalty in the credit, and it requires the department to allocate couples combined AGI to each spouse based on the spouse's percentage of their earned income. Section 12 is the Minnesota housing tax credit, which allows an income tax credit equal to 85% of contributions to the Minnesota housing tax credit account. The credit is effective for tax years 23 to 2028. Section 13 allows the film production credit against the insurance premiums tax. Section 14 allows the housing tax credit against the insurance premiums tax. Section 15 sets up the Minnesota Housing Tax Contribution Fund or account. This is used for grants and loans for housing for persons with low to moderate incomes. Account funds must be set aside until September 1 for at least 10% for housing in towns and small cities, 35% for housing for persons with income at or below 50% of AMI, and 25% for single family housing. Section 16 eliminates an addition for Section 179 subtraction carryovers. This is a kind of a cleanup to a provision that was enacted in October of 2020 for full Section 179 conformity. Madam Chair, that concludes Article 1. I will go on to Article 2, partnership audits. I won't discuss each section by section, but we'll just kind of discuss the concept of the article in general. The partnership audit provisions were almost exactly the same in the House and the Senate as they came into the conference committee and as they are in this bill and the House companion here. So the partnership audit article modifies the state reporting and payment requirements that are generated by federal audits and assessments. These changes are in response to some federal provisions enacted in 2015, which provided for conducting audits at the partnership level rather than at the individual partner level. The sections are effective retroactively to tax year 2018 or earlier if applicable. Article 3 is the pass-through entity tax, which establishes a refundable pass-through entity or PTE tax that allows pass-through businesses to pay income tax at the entity level and deducts this for federal income tax purposes. And this is also kind of known as the $10,000 SALT cap workaround. The PTE election may be made by owners holding more than 50% interest in the business entity. And then PTE owners claim a credit against their individual income tax for the share of the amount that they paid at the entity level. These provisions are effective beginning in tax year 2021. Moving on to the Article 4, sales taxes. Section 1 requires, after a November forecast, a transfer from to reduce the June accelerated remittance percentage until the percentage equals 0. Section 2 exempts vendors of construction materials from the June accelerated remittance requirements. And there's a definition of vendor of construction materials provided here. This would be effective July 1. Section 3 is just kind of a conforming change to add a cross-reference to the reduced percentage remittance requirement in Section 1 for the possibly reduced June accelerated payments. Section 4 is a provision that exempts sales made by school-associated student groups, nonprofit groups, when the money is recorded as part of a school district, as part of school district revenues. And there are a couple of requirements there, but it essentially reinstates the fundraising sales for schools. Article 5 it creates a definition of delivery sale for purposes of regulating the distribution of tobacco products from out of state. It requires out-of-state retailers to collect and remit cigarette and tobacco taxes in the same manner as in-state retailers. And this section also adds clarifying language to the definition of nicotine solution products to reflect kind of more updated terminology for these products. Madam Chair, Mr. Sylvia, I believe will continue with Article 6, property taxes.
Thank you. Mr. Sylvia.
Madam Chair, members, Article 6 is property taxes, and Section 1 is the authorization to create fire protection special taxing districts. This language is the same as it left the Senate and was brought to conference committee. Section 2 reestablishes a property tax exemption for approximately 30 parcels in Cass County owned by the Leech Lake Band of Ojibwe. This came from the House, and this was not included in the Senate tax bill. Section 3 was included in the Senate tax bill and expands the definition of qualifying relative for purposes of agricultural relative homestead, and no changes were made to that section. Sections 4 and 5 extend the homestead occupancy and application due date from December 1st and December 15th to December 31st. Section 6 makes changes to Class 2 rural vacant land and attempts to clarify some conflicting language relating to Class 2 rural vacant land in the Sustainable Forest Incentive Act, and requires that when a parcel of at least 20 acres is enrolled in the SFIA program and the parcel is improved with a structure, the number of acres assigned to that split parcel is the greater of 3 or the number of acres excluded from the SFIA program. This language came from the governor's bill and was not included in the Senate tax bill when it left the Senate. Section 7 relates to a Class 4D low-income rental housing, and Section 7 sets the first tier limit for 4D property at $100,000 for 2 assessment years, those being 22 and 23, and beginning with assessment year 2024, the first tier limit is annually adjusted as is under current law. Section 8 is also a conforming change by extending the application deadline date for the disabled veterans homestead market value exclusion due to December 31st. Under current law, it is December 15th. Section 9 and 10 relate to the state general levy, and these two sections are identical to the language that was carried in the Senate bill. Section 10 increases the market value exclusion on CI property from the first 100,000 to the first 150,000, and Section 9 correspondingly reduces the CI portion of the state levy to prevent any shifting. Section 11 is a conforming change that requires fire and ambulance special taxing districts established under Section 1 to hold truth in taxation hearings. And Section 12 is language that came from the House, and this requires a supplemental statement to be included with the T&T or notice of proposed property tax statement containing the percent change levy proposed for the following year by each of the taxing jurisdictions, and also summary budget information for those taxing jurisdictions. Section 13 is a conforming change by adding the fire protection special taxing districts to the list of special taxing districts. Section 14 is language that came from the Senate bill, and this excludes veterans' disability compensation from the definition of income, which is used for purposes of the homestead credit refund and the renter's property tax refund. Sections 15 and 16 are also from the Senate bill, and this authorizes a city to impose special assessments for certain energy improvements. Section 17 is a provision from the House bill, and this removes the levy limit for the Cloquet Area Fire and Ambulance Special Taxing District. This change was made to coincide with the removal of the levy limit for emergency medical special taxing districts and fire protection special taxing districts authorized in Section 1. Section 18 is a hold harmless provision, and this is related to the earlier provision I discussed concerning the SFIA and Class 2B rural vacant land. And section 19 is a 4D, class 4D low income rental housing affordable housing program report. And this is language that came from the House, and this requires the Commissioner of Revenue to produce a report on class 4D property, specifically the number of 4D units and property tax impacts of the 4D classification if the first tier of 4D was lowered to 0.25%. Madam Chair, members, that concludes Article 6, property taxes. And I see Senator Rest may have a question.
Senator Rest.
Thank you, Madam Chair. Going back to the setting aside of the income with regard to a veteran's income with regard to the property tax refund. In the major part of the bill, the PPP and PUA are not disregarded with regard to not only with regard to the PTR and renter's credit, but also with regard to the education credit. And I would ask Mr. Sylvia, with regard to the provisions about veterans' income, is it only not to be included in household income with regard to property tax refunds, or is it also not to be regarded in the case of the education credit?
Mr. Sylvia.
Madam Chair, on Senator Rest, the change that is made in this article is just specific to the renter's property tax refund and the homestead credit refund. So for purposes of those two programs, to determine eligibility for and the amount of refund, renters and the homestead, the veteran disability income is not to be included.
But Madam Chair, for the if those same taxpayers were claiming the education credit, tax credit that we have in place without any changes, household income there would have to include this income because it is not excluded from household income in determining the education credit. Is that correct?
Madam Chair, Senator Rest, I can. Madam Chair, Senator Rest, I can answer that. Right, there are no changes made to the any inclusion or exclusion of veterans of this particular income that Mr. Sylvia was describing. There are no changes to the inclusion of that in the education credit.
Okay, thank you very much, Madam Chair. It is being treated differently, this income, with regard to property taxes as opposed to the education credit, although the PVP and PUA, they're not, those non-taxable income portion amounts are nevertheless to be included in household income and in determining the property tax refund, and also whether it's renters or homeowners, and also education. I'm not disputing it. I'm just wanting to make sure that we understand that some income gets into household income with regard to the two programs, and other income just simply does not. Thank you.
Thank you, Senator Rest. And you do make the point that we never accomplish everything in any bill, particularly a tax bill. And there are always additional conforming items or similar treatment that are things that certainly can be looked at in future years. But for the year we have in front of us.
Just looking at consistency, Madam Chair. Thank you.
Thank you, Senator Rest. Let's see, Mr. Sylvia, I think you're moving on to Article 7, aids and credits.
Madam Chair, members, Mr. Arneson will be walking through Article 7.
Mr. Arneson.
Madam Chair, Article 7 is the property tax aids and credits article. Section 1 is a fairly technical provision that transfers the $500,000 of county program aid designated for public defender costs directly to the Board of Public Defense rather than routing it through the Commissioner of MMB. Section 2 is the local homeless prevention aid program that had been proposed in the House bill. The version here in the Senate file is similar in concept to the House. The allocation formula among the counties is slightly modified, and the total annual appropriation is slightly less than had been originally proposed. This program begins effective with aids payable in 2023 and runs for 6 years. Section 3 is the supplemental 2022 city aid distribution proposal that had been carried in the Senate bill. And this would basically top up any city for which the paid 22 LGA is less than the amount certified for that city in 2021. And this is a 1-year provision. And finally, Section 4 is a grant to the city of Floodwood. That city had originally submitted a local option sales tax bill. The House proposed paying for the amount of taxes proposed to be raised in the form of an LGA adjustment over a handful of years. The provision proposed here is a 1-year only grant for the city of Floodwood for the same purposes that the city proposed in their local sales tax proposal. And that concludes Article 7.
Thank you, Mr. Arneson. And then Article 8, Senator Rest, I see your hand. Senator Rest.
Thank you once again. So with regard to Section 2, the local homeless prevention aid, which was a House provision, I don't have the actual language in front of me. I'm just looking at the summary. Are there any directives or as what we call guardrails as to what this $20 million a year can actually be spent on? It's my understanding that it's not eligible or it is outside of the federal guidelines, and that it needs to be spent on programs that are not covered by the federal money. And what kind of language is it in this bill with regard to Article 7, Section 2, that is the House provision that limits or directs or has guidelines or guardrails or whatever you want to call it with regard to how this $20 million is spent every year?
Thank you, Senator Rest. I think both Ms. Pollock and Mr. Arneson worked on the homeless prevention aid, and I'm not sure who would be best to address that. Would that
Either one is fine with me.
Mm-hmm.
Madam Chair, for members and viewers that have the bill language in front of them, I'd refer them to the subdivision that begins at 106.27 of the bill text. This subdivision outlines the permissible uses for a county that generates aid under this program. And if you like, I can just summarize the kind of the general uses. Among them would be targeting families with children who are eligible for school programs and are living in overcrowded housing, are paying a substantial portion of their income for rent. They lack a fixed, regular, adequate nighttime residence. Secondly, targeting unaccompanied youth in need of alternative residential settings. Third, connecting families with social services necessary to maintain the family's stability. Fourth, one or more of the following, including providing rental assistance for a specified period of time, not to exceed, which may exceed 24 months, or providing support and case management services. So to answer your question, Senator Rest, it's a fairly comprehensive list of
permitted
purposes that would be required in a project plan or program developed by county.
And so, Madam Chair,
Senator Rest.
Madam Chair, Minister Arneson, the dollars that are in this program could be used to give individual renters, families, pay their rent. Is that an oversimplification?
Mr. Arneson.
Madam Chair and Senator Russ, I think the language at 107.11 would specifically allow that, and that line reads that the county's plan itself may provide rental assistance for a specified period of time, which may exceed 24 months. So it's kind of explicitly indicated there.
And Madam Chair, this is all determined. This is all determined by that formula, which applies to young people, school age, and I don't remember. It's something Vento thing, statistic that says who's eligible, and in this instance, no county will get less than $5,000 with regard to dealing with these homeless challenges and situations, even if they just but even if they distribute it as individual families, rental assistance, paying their rent through this program. Is that correct, Madam Chair, Mr. Arneson?
Yes, the McKinney-Vento
yes.
our schools are required to do is the determining factor in how many homeless youth there are, how many homeless students there are in a district, and that plays into that helps determine the formula. The House provision had this aid going on forever without an end anytime. The Senate has put a 6-year limit on that. It is accurate that no federal funds, this cannot be used for something, this is for things that the federal funds were not eligible for. Yes.
I just think it's important, Madam Chair, for our members to understand how this money will be distributed, this $20 million across the state will be distributed, and the separation from the federal guidelines and also how it will affect. It's not just programs. It's not just after school homework programs. It is actually money that could be distributed to individuals and their families. I just want to make sure that the Senate understands that House provision.
Thank you, Senator Russ. And the separation from federal guidance was more of the case duplicative. We were not interested in using our Senate funds for something that the federal government was going to pay for. So that was kind of the insistence there. And the other note,
Madam Chair.
The House provision did leave some districts without any funding, and so the Senate made sure took away, shared the funding, so everyone had some. And I know, Mr. Arneson, you might have some more to add to that. Maybe the fact that it's not a whole new program, but we're running it on top of CPA, so we're not starting a whole new aid program. Mr. Arneson.
Madam Chair, just to amplify what you said about this money being, from a general membership, and that's not restricted in any way by what the federal government had provided in ARP or otherwise. There's this language that would prohibit a county from using these funds for activities that are also otherwise permitted under the federal language, but this language in the Senate file doesn't admit it to federally allowed activities.
And I'm afraid you froze up on that first part of your comments there, Mr. Arneson. So would you repeat that, please, regarding federal funds and these dollars? Mr. Arneson.
as you indicated, because this program is funded with a state general fund appropriation, the state, the counties, which will be implementing these programs, aren't limited by the guidance that would otherwise exist from the federal government regarding allowable uses for those federal funds for similar services to offset the effects of homelessness. However, I don't see anything in this language here before us that would limit to use this state money for similar purposes that they're using their federal money for. So I think in the one sense, complementary in that the state money isn't restricted by federal guidance, but it's not, we're not mandating that the counties spend on disallowed items under the federal bill.
Thank you, Mr. Arneson. All right, I don't see any other questions at the moment or hands. So I believe we're ready to move on to Article 8, which are local taxes. And I believe that would be Ms. Pollock. Ms. Pollock.
Madam Chair and members, yes, Article 8 is local sales taxes. Section 1 is a new provision that kind of came out of this discussions in the conference committee during regular session about defining a capital project for purposes of what revenues that are collected from a local sales tax may be used. So a capital project can include any one of these three things: a single building or structure, including associated infrastructure, improvements within a single park or recreation area, or a contiguous trail. And this definition would apply for proposals that are submitted after the day following final enactment of this bill. Madam Chair, the Section 2 is the City of Sartell special tax, and it removes the expiration date of the food and beverage tax and amends the referendum requirement to allow it to be held at a general or special election determined by a resolution adopted by the city's governing board. Madam Chair, would you like me to go through all of the authorizations?
No, I don't think that's necessary. I think what's necessary is to just speak to the process, which is a little new this year as compared to other years regarding local option sales taxes. So I think that's important. And then I think that would, and just mention the cities. I think that's all we need tonight.
Sure. Madam Chair and members, right. So the changes that were made in the 2019 tax bill required that local jurisdictions first adopt a resolution proposing their local sales tax and outlining the projects and the amount that would be needed to finance the projects, and submit that resolution and kind of underlying documentation to the chairs and ranking members of the House and Senate tax committees. The cities and counties that are included in this article generally did comply with that requirement. There was some back and forth about kind of nailing down the exact amounts of the project costs and so forth. I will also note that the project proposals that included road projects and water and sewer projects were not included in this article, and that kind of goes along with the new definition of a capital project that I outlined in Section 1. Madam Chair, after the City of Sartell, we have Carleton County authorizing a sales tax to finance a law enforcement center, judicial center, and jail. An authorization for the City of Cloquet for improvements to the Pine Valley Regional Park and restoration of the Cloquet Ice Arena. The City of Edina is authorized to impose a half-cent tax for development of the Fred Richards Park and improvements to Braemar Park. The City of Fergus Falls is authorized to finance construction of an aquatic center and the De Lagoon Improvement Project. The City of Grand Rapids is authorized to impose a local sales tax for the IRA's Civic Center. The City of Hermantown is authorized to impose their local tax for improvements to the Hermantown Hockey Arena, construction of the Hermantown Proctor Trail, and improvements to Fickner Park. Itasca County is authorized to impose their tax for construction of a correctional facility and associated court facilities. The City of Litchfield is authorized to impose their tax for construction of a community wellness and recreation center. In the City of Little Falls, they are authorized to impose their tax for, construction of a community recreational facility. The City of Maple Grove is authorized to impose their tax for expansion and renovation of the Maple Grove Community Center. Mille Lacs County for a public works building. The City of Moorhead for construction of a regional library and community center. In the City of Oakdale, a new public works facility and expansion of the existing police facility. The City of St. Cloud for their municipal athletic complex. The City of St. Peter for a new fire station. And the City of Staples for renovation to their community center. The City of Wadena for their library rehabilitation project. And the City of Waite Park for the public safety facility and trail connections there. And then finally, the City of Warren is authorized to impose their tax for construction of a new childcare facility. And that concludes Article 8.
Thank you, Ms. Pollock. And I think we'll go out of order just a bit here. I realize that we'll likely be called back onto the Senate floor soon. And so we'll continue the walkthrough later in Articles 9 and on, but we would note that these have been posted for 2 or 3 weeks now. So perhaps you all have been familiar with those. But I do want to make sure that I would move the A7 amendment, and I will ask staff, this is important that we have our nonpartisan staff walk through the A7 amendment. This is the amendment that the House had added onto the tax bill. I believe it was yesterday. They, for the most part, these were items that, and I'll ask staff to identify those. Those were items that were agreed to between the tax chairs or between leadership. There were a couple, 2 things that were a bit of a surprise in the A7 amendment, and we will do those. So with that, I would move the A7 amendment. And if staff could speak to briefly but also significantly enough so that our members do know what is in that A7 amendment. And I think we would start with Ms. Pollock with the angel.
Yes, Madam Chair and members, I will be going through the first several items on the amendment. Mr. Sylvia and Mr. Arneson will also be summarizing a few sections. And then Ms. James and Ms. Fontaine from Senate Council Research and Fiscal Analysis have worked on some of the other provisions that are included in this amendment. Madam Chair, the first item update is a very technical just correction in the bill to update the sunset section in the angel investment credit. Because the credit is being extended for 1 year, we then need to update the or push out the sunset sections of the credit in the statutes. The next item on 1.11 of the amendment removes the requirement that films produced in connection with the film credit display a logo promoting Minnesota in worldwide promotional trailers. 1.12, the next item is a clarification that film credit assignees can claim the credit against income tax or insurance premiums, but not both. 1.13 to 1.14 are clarifying, providing that the conformity provisions reflect the Internal Revenue Code as amended through March 30th of this year. 1.15 removes some unnecessary language regarding the non-taxable PPP income and unemployment compensation that is already considered non-taxable for purposes of the K-12 credit. 1.16 to 1.18 just corrects some terminology. as does the language on the next line of the summary there, starting at 1.19. And the last page and line reference is 2.27 to replace the term fund with account in the Minnesota Housing Tax Credit sections. The next provision on 1.21, similarly to the film credit, says that the housing tax credit can be claimed against income tax or insurance premiums tax, but not both. The next line, 1.25 to 1.26, is a clarification on the effective date for the housing tax credit. The next item clarifies that the set-asides for the housing tax credit that I outlined earlier in this summary are minimum amounts, and they don't have to be exactly the specified amounts. The next item, 2.8 to 3.30, provides that individual taxpayers with no Minnesota source income, other than the income on their pass-through entity return, are not required to file an individual return themselves. 3.31 to 4.3 modifies the definition of vendor of construction materials for purposes of the exception from remitting June accelerated sales tax. So to require that at least 50% of their sales in a fiscal year are derived from the sale of materials that are defined in the underlying bill. The next item, 4.4 to 4.17, is a newly agreed to provision to add the sales tax exemption for collegiate event preferred seating. 4.18 to 5.4 extends this is also a newly agreed to provision, extends the exemption in current law for construction materials used for the fire and police station improvements in Minnetonka. 5.15 to 8.12 adds the construction materials, a general exemption for construction materials used in public safety facilities, and also contains those cross-references for the refund provisions. And this would be prospective going forward, beginning on July 1. The next few items are also newly agreed to, and these would be retroactive sales tax exemptions. 8.13 to 8.20 extends the current exemption for construction materials used to rebuild structures damaged by a fire in Melrose. Similarly, 8.21 to 9.11 adds the exemption for construction materials used in rebuilding structures damaged by fire in Alexandria. 9.12 to 9.27 adds the sales tax exemption for construction of a fire station in Buffalo. The next item adds a sales tax exemption for construction of a new fire station and emergency management operations center in Maplewood. The next item adds a sales tax exemption for items or materials used in demolition, replacement, renovation, and expansion of 2 fire stations in Plymouth. The next items, 10.29 to 11.16, clarifies and corrects some incorrectly, mistakenly stricken language in the definition of nicotine solution products. And Madam Chair, I believe that I am going to stop here for now, and Mr. Sylvia has the next few items.
Thank you, Paul. Mr. Sylvia.
Thank you, Madam Chair and members. Line 1117, this delays the effective date for the supplemental notice requirement. This is the additional notice along with the truth and taxation statement. It just extends that effective date so that that additional notice would apply for taxes payable in 2023. The next section is a new section, and this requires the Commissioner of Revenue to initiate a review of the process by which utility and pipeline property is valued. These are state assessed properties, not assessed by the local governments. The next 2 sections, lines 11.24 through 13.17, these sections add parcels to the Lake Vermilion Sudan Underground Mine State Park and also provide for a payment in lieu of tax provision for these additional parcels. These 2 sections are new and were agreed to. And the last section that I will be discussing, Madam Chair, is beginning on lines 13.18 to 14.12. And this section appropriates approximately $29.3 million to designated counties that are required to pay a refund for property taxes owed related to the Enbridge pipeline as a result of overvaluation. The language does require that these grants be used to pay the refunds owed by the counties and other taxing jurisdictions within that county. These grants must be paid by the commissioner to the counties by August 15th of 2021. And I will turn this back to Ms. Pollack, Madam Chair.
Thank you, Mr. Sylvia. Ms. Pollack. please.
Madam Chair, the next two items are making a technical correction in the local sales tax article to the City of Grand Rapids authorization. And then on 14.15 to 16.6, this language corrects the amount for the projects in the Hermantown local sales tax authorization. After some discussion with the city, we needed to correct those amounts authorized for which revenues may be used to fund those projects.
Madam Chair, members, line 16.7 to 16.8, this is a technical correction relating to a provision in the TIF article relating to the city of Richfield. And this specifies that the city's Housing and Redevelopment Authority, rather than the Economic Development Authority, has the authority to transfer tax increment to the city's Affordable Housing Trust account.
Madam Chair, the next item on 16.9 to 16.10 pertains to the Tax Expenditure Review Commission that's established in the miscellaneous article in the bill. And this is just a clarification that the Department of Revenue is required to share summary data with the commission.
Thank you. And then Ms. Pollack, are you next?
Madam Chair, Ms. James will describe the next item.
Ms. James, welcome to the committee.
Thank you, Madam Chair. Madam Chair and members, the next item, beginning on line 16.11 through 19.33, is a provision that was in the House State Government Omnibus Bill in regular session. And this creates an obligation for state agencies to consult with tribal governments on a periodic basis, but then also on specific issues of interest to tribal governments.
Thank you.
Madam Chair, the last item on page 2 on 19.34 of the amendment also pertains to the Tax Expenditure Review Commission and just removes some unnecessary language regarding data sharing. And Madam Chair, I believe Ms. Fontaine and Ms. James and Mr. Arneson have the summary for the rest of the provisions.
Thank you. And these are, most of these are new provisions that were part of a leadership agreement after we had passed the omnibus tax bill. So who would be speaking to the OSB provision?
Madam Chair, this is Carolyn Fontaine, and I'll speak to the OSB production incentive. This would create a new production incentive program for Oriented Strand Board. And this provision sets out certain parameters for when the facility must begin construction, when it needs to begin production, and the amounts of production. There's certain capital investments within the state, and then specifies the amounts for the production incentive award amounts. Also, the amount of forest resources that need to go into the product that is produced by the facility. There's also a statutory appropriation contained within this section. And the appropriation would begin, the production incentive would be paid out over 10 years, beginning, I believe, in 2026 through 2036. So the first statutory appropriation is $1.5 million in general fund in fiscal year 2025. And then annually through fiscal year 2036, $3 million would be appropriated to the Commissioner of Agriculture for this production incentive and for the facility or for the payouts for the incentive program to occur. And so this would be a 10-year program for this production incentive through the Department of Agriculture for this facility. And that is that provision.
Thank you, Ms. Fontaine. And Senator Weber.
Thank you, Madam Chair. Just a quick question, Ms. Fontaine. I haven't had a chance to read this carefully. Do they need to be in production before they receive money?
Ms. Fontaine.
Madam Chair and Senator Weber, yes. If you look at line 20.20, they must begin production at a specific location by June 30th of 2025. So that's on 20.19. They can't begin operation before January 1 of 2022. So yes, they do need to be in production, and there's certain dates that are provided for them to meet the thresholds and requirements for the program.
Very good, thank you.
Thank you, Ms. Fontaine, and Senator Weber.
Madam Chair, Stephanie James, I have the next item, which is begins on line 22.7 through 25.21. This establishes a competitive grant program for capital improvement projects that serve economically disadvantaged people or that are located in economically disadvantaged areas. Local governments and nonprofit organizations are eligible for these grants. It also has a match requirement, 50% match requirement, unless the applicant falls into one of three categories. One, that the project is located in a very low net tax capacity area, or the applicant is experiencing hardship, or the applicant serves underserved communities. There are criteria for prioritization amongst the grants, and then there is a provision that requires payback of the grant amounts if the property is sold after it's been improved with this money. And a couple sections down, there'll be an appropriation for this program.
Thank you, Ms. James. And again, this was a leadership project that came through most recently. Yeah, Ms. James, go ahead.
I didn't know if you're ready to move on to the next item or not. Okay,
yes.
The next item, beginning on line 25.22 through 26.15, is a modification of an appropriation in the 2020 bonding bill. This is for the Victoria Theater project. It was a cash appropriation. So it does not require a 3/5 vote, even though it comes from the bonding bill last year.
Thank you. And the next piece is
Yes, Madam Chair.
Ms. Fontaine.
Yes, I will take that one. The next section would establish a frontline worker pay working group, and this would include legislators as well as 3 appointees from the executive branch. But this working group would be established to make recommendations to the legislature to disperse $250 million. Right now, it's unspecified in this language where it would come from, but my understanding is would be from federal funds. It's not general funds. It would be direct financial support to frontline workers. Again, this would be a 9-member working group, and there would be three House members, 3 senators appointed in the traditional way through the Speaker and the Minority Leader and Majority Leader, and then 3 members representing the executive branch appointed by the governor. These appointments will be made by July 15th, and they would begin meeting then. The working group is being established to, as I mentioned, disperse $250 million to frontline workers. And really the only specific information about frontline workers included here is that they must include long-term care workers, and that the working group should consider factors including the frontline workers' increased financial burden and increased risk of virus exposure due to the nature of their work. It also provides that the Speaker of the House would convene the first meeting, or have one of their designees convene the first meeting. These would be open to the public, and the LCC would coordinate the space for the meetings. The working group would then come together and submit a proposed legislative language. This would be presented to the governor, Speaker of the House, and the Senate Majority Leader. This is to be done by September 6th of 2021. The working group is also supposed to adopt a recommendation, and they need 7 of 9 members to approve it. But if they can't get 7 of 9 members to approve a single recommendation, then the group can present 3 drafts of legislation for potential options. And finally, the working group would expire once the proposed legislation is submitted to the governor, speaker, and the majority leader. And that is the language of this working group for the frontline worker payouts.
Thank you, Ms. Carlin. And just for clarification, I do want to make note, Mr. Wellms, that this does not appear on the spreadsheet in the tax committee. We do not have $250 million on our spreadsheet. I think that's important. If you could just clarify that for the record, I think that would be key. Mr. Wellms.
Madam Chair, that is correct. Technically, it does appear on the spreadsheet, but it's under the non-budget items, so it doesn't appear on the part of the spreadsheet that matters in subtotals. So there's reference to the frontline working group, but you're correct in that the $250,000 appropriation, as Ms. Fontaine referenced, is not in the text of the amendment and therefore is not being tracked.
Thank you, Mr. Wellms. So the amendment is setting up the working group. Senator Bach.
Well, thanks, Madam Chair. Mr. Wellms, is this $250 million, this bonus that these individuals are going to get, is it going to be subject to state and federal income taxes?
Mr. Wellms.
Madam Chair and Senator Bach, it's a good question. I believe it would be, but I think I might have to phone a friend and defer to Council Ms. Pollock to see if she can concur with that as well.
Ms. Pollock.
Madam Chair and Senator Bach, I think these would be subject to, they would be included in gross income, so subject to tax at the federal level. The working group could decide to enact a subtraction, full or partial subtraction for an amount of the payments for purposes of state income tax. I would want to check, since this is coming from federal funds, if there is some kind of like overarching language in that disbursement that provides that they are excluded from gross income. But I'm not aware of any of that at this time.
Very good.
Thank you, Ms. Pollock. And Senator Bach, that's a very good question, something we'll have to keep a close eye on. Thank you. I think we have just these last 4 appropriate pieces of the amendment were things that did come over from the House that was not, I guess the last one was, but the next 3 were ones that were a bit of those surprises that came over from the House. So I want members to be aware of that. And so who could speak to 27.17 through 27.24? Is that Ms. James?
Madam Chair, yes, I'll speak to that one. The one beginning on line 27.17 is an appropriation of $24 million. And this is for grants in the competitive grant program that I had just described above. And then the next item, beginning at line 27.25, is a $6.2 million appropriation, also from the general fund. This is to the Commissioner of Transportation for project development for the Rondo Land Bridge.
And Ms. James, we do want to be clear that the language that we are looking at regarding on lines 27.17 through 27.24 is the language that was developed here in the Senate.
Madam Chair and members, yes, that both the grant program and the appropriation that goes with it are the Senate's developed language.
Thank you. All right, and then who would speak to line 28.4 to 28.8?
Madam Chair, the last 2 I can take. The item at 28.4 addresses an issue from the Omnibus Environment Bill, now enacted as Chapter 6. it's my understanding that the House proposal in the Environment Committee was to dedicate $250,000 of the $1 million appropriated for recovery grants for the Grand Portage Band to focus tourism to Grand Portage. In negotiations in that committee, that the House's position didn't get adopted and wasn't enacted, but that set aside is proposed here in this section. And finally, the item at 28.9 provides fire remediation grants to the cities of Melrose and Alexandria for essentially the costs of remediating the fires there in the last couple of years. And there are allowable uses indicated both in the bill text and the summary here. And that is about it and concludes the A7 summary.
Thank you, Mr. Arneson. So members, the amendment has many of the things that are technical, some new things that were agreed to by leadership and the chairs. And then of course we had a couple items that did come over from the House. And I do want to see if there are any further questions. We had a pretty good summary of this. We had some questions. I don't see any further questions. So what we would do tonight then to get the bill in a shape that is closer to passage as our clock is ticking, Senator Weber, would you please move the A7 amendment?
So moved, Madam Chair.
Thank you, Senator Weber. So the A7 amendment then has been moved. Just so members know, we will then lay this, the intention is to pass the amendment onto Senate File 26. We will lay it on the table this evening as we wait to, as you know, the bill must come over from the House. That's our constitutional requirement. So just so you know what the process is this evening. So seeing no further questions, all those in favor of amending Senate File 26 with the A7, please signify by saying aye. Aye.
Aye. Aye.
Opposed? No. Members, Senate File 26 has been amended with the A7. We will lay that on the table, members. Want you to stay close. We may have some further work to do. I would be remiss though if I did not call out and thank our Vice Chair, Senator Miller, and the lead, Senator Rest, and of course then Senator Weber, who was the chair of the subcommittee on property taxes. I'm just so thankful for the great leadership that you all have shown, and the entire tax committee has just been phenomenal. And the tax staff, as you can see, their careful eye looking carefully at the numbers, the language to make sure that our intentions are accurately recorded in legislation. I just cannot thank you enough. We know our work is not quite done, but with that, members, again, thank you so much. This meeting is adjourned.